Okay, good morning everyone. This is your boy Flexi, and I will be your host and tutor for today's session. It's been a while. Okay, if you're actually looking on going into trading, but you're actually thinking on okay, fine, which aspect of trading do I want to go to? Okay, I'm just here to break it down for you today. The three major aspects of trading, though there are more than three, but the three major aspects of parts of trading. We have three types of trading here. We have the Forex, we have the crypto, and we have the stock. So, and today I will take my time to actually break down each and every one for you bit by bit. So kindly stay with me till the end of this video because I'm going to be talking a lot about each and every one. So first of all, let me start with Forex. Forex stands for foreign exchange. Foreign exchange, that is, you buy in currencies. It just deals with currency, and you buy currency. Maybe for example, you use the euro to buy dollar, or you use dollar to buy euro. You get? And Forex is the largest financial market in the world with over 6 trillion transactions daily happening. $6 trillion transaction happening daily. So it's now left for you to actually see, okay, fine, can I be able to actually just pinch small out of this $1 trillion moving in the Forex market every day? So that is it. And the Forex market just move, just open maybe 5 times a week, just the working days: Mondays, Tuesday, Wednesday, Thursday, and Fridays. And the reason is because of what actually moves the market. Okay, what moves the Forex market is majorly banks and financial institutions. You get? Because you are dealing with currency, and the exchange of currency, we all know that the exchange, saving, and any kind of monetary transaction usually happen in the bank. So the banks and the financial institution, they are the one that actually control the movement and volatility of everything happening in the Forex market. So, and also, aside the banks and financial institutions, we have the economic data. The economic data actually play an important role also in moving the market. For example, a particular country, let's say the United States can just decide to give in or to give out its let me say interest rate report, to give out its non-farm payroll, the consumer price index. These are economic data that actually move the Forex market, move the Forex market. And also, aside central banks and financial institutions, aside also the economic data, also global events like war, politics, and the change in interest rate, gross domestic product, all these actually move the market. For example, because I can vividly remember last year when the president of United States was actually attacked, the Forex market, especially those USD pairs, they got destabilized maybe for like a week. For like a week. And also when United States increased its tariffs on China, also this actually moves the market, and the market stop giving out like a good structure to trade. So anything you do at that kind of time is actually at your own risk. So now, let me just give you an example now. Let's say I want to trade Euro USD. Euro USD, that is the euro and what against US dollar. So if I want to buy, if I'm buying, that is, I'm using my US dollar to buy euro, meaning I'm speculating that the euros is going to rise against dollar, is going to strengthen against dollar. So if the euro now weaken instead of strengthening, then trust me, I'm going to lose money. But if it's strengthening, then I'm going to be in profit. So that is how it is. You get? Whereas if I say, okay, I'm selling euro against dollar and euro strengthening, then trust me, I'm going to lose money, and if it weakens, I'm going to gain money. So that is it. It's just, I think, yeah, just know that they open 5 times a week. And what moves the market, because you actually need to be paying attention on economic data, news release, central banks updates and all, you get. And the volatility of things happening in the forex market is just moderate until if you maybe witness a news release or maybe something happening. It's not like that kind of crypto, you get. Yeah, the volatility is just there, but not actually consistent, but it's just there, it happens. So that is for forex. Stock market is the next. So stock market, you can call them commodities, you can call them stock markets. Okay, an example of this stock market, we have the Apple, we have the Amazon, we have the Tesla, we have Dangote, so they are called commodities. In other words, you can call them shares of commodity. So what you actually trade, if you are a stock trader, is you trade a share of commodity. You understand? You trade a share of commodity. Let's say, for example, now you want to use $100 to buy a Tesla stock. That means you're actually buying a share, a piece of that company, you get, and you can profit from it, depending if you actually long or you buy a piece of Tesla stock. And let's say you are fortunate that, okay, fine, the stock actually strengthens, then you are going to be in profit. Whereas if it weakens, then you are going to be at loss. So that is it. And the stock market usually is more volatile during the New York session. Yeah, the New York session around, let me say, 9:30 a.m. to 4 p.m. Eastern time. Yeah, that's when the stock market is very volatile. So now, what actually moved the stock market? Just like the forex market, we know that what moved the forex market is the economic data, banks and financial institutions, and what and global events. So what moved the stock market now is usually earning reports, industry trends, get overall commodity and indices. All these actually move the stock market. You get, for example, now let's say Tesla can actually decide to just give out its report earning for this month now. So let's just make an example. For example, now today is 4th of September, right? And let's say Tesla are giving out their earning reports for this month. So since Tesla will be giving out their earning reports for this month, then investors will actually have their eyes on Tesla to see how far is it going to do well. If Tesla maybe does a very good thing, then that is, if the earning report comes out positive, then investor will actually invest in Tesla. You get, whereas if it comes out negative, then some of its investors would like to actually just remove their money out of that commodity. Okay, now let's say Tesla are giving out their earning report for this month. Now 4th of September, Tesla will be giving out their report earning, and that means last month, 4th of August, they gave out their report earning too. So if they drop the update today, so you pick out the update that is before the report. There is what we call, maybe in our next class subsequently, I'll be teaching you how to actually read news and some other stuff like that. So it's just all about comparison. You compare what has happened in the last month, 4th of August, and 4th of September, which is today, to see, is it actually positive? Like, did they make money? You understand? Let's say 4th of August now and 4th of September, and everything just came out positive. That is, they make money. So since they make money, investors will actually like to invest in Tesla. That is making Tesla to strengthen. I don't know if you understand me. Yeah, making Tesla to strengthen. So that's it. Which whereas if last month was actually bigger than this month, that is, it comes out negative, then trust me, some of its investors would like to just remove their money out of Tesla, that is making it to what, to weak or what, or go down. So that's it. That is it. And the stock market is not as volatile and is not as big as the forex market, but actually it's also large, but not as big as the financial market. Sorry, as big as the forex market. So that is it. And yeah, so that is it for stock market. That's it for stock market. So stocks like, let me say, the S&P 500 and Nasdaq, they used to give their economic updates, their report updates every month. So when they are giving this release now, investors will have their ears and eye open to see what's going to happen. The moment it comes out positive, then people will start investing. People will start buying until it gets to a certain time. Okay, fine, it's actually time to short. That is time to start selling. So that's it. So let's talk about crypto now. So crypto, what do you trade in crypto? What you trade in crypto are actually digital currencies, virtual currencies. You don't see them, yeah, and you just know that they are there, but you don't see them. An example is Bitcoin, the Ethereum, the Doge, the XRP. You get? So these are what you trade, and it's smaller than forex and stock. The crypto market is actually smaller than forex and stock, but it's actually growing fast too, and the market never closes. It opens from Monday to Sunday, 247, midnight, morning. The crypto market is open. So what actually moves the market? We know that for forex, we know what moves the market are what? Financial reports, economic data, global events, and what? And banks and financial institutions. Whereas for stock market, you know what moves the market is their industry trend, overall economy, indices, report earnings. So what moves the crypto market is just supply and demand. Supply and demand. So yeah, supply and demand is just what moves the forex market, the crypto market, and is actually more volatile than forex and the stock market. It moves very, 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 very fast. You get? So, and also partnership and adoption to news also influence the crypto markets. Yeah, let's say Doge actually partner with XRP, then something is going to happen definitely, but we don't know what. Yeah, and also big players. Yeah, the big players, we call them the whale movements. The big players, let's say maybe institutions can just decide to just put their money on XRP or put their money on Doge. So that's going to actually make Doge or XRP to spike. And where you can actually find, unlike the forex market, the crypto market, you get to see sentiment. Yeah, sentiment. Maybe if you check, we call them community sentiments. You can check Twitter, you can check Reddit, you can check Discord, where you get to see their updates on things happening, projections, forecasts. You get? So that's it. So please, if you actually find value in this my video, just take your time to just go through, try to understand everything I've said from the forex, stock, and crypto. Yeah, I'm not in position to actually advise you on what kind of trading you should go into, but just listen and pay attention to my video. You get? So, and let me just point out this thing now. For stock market, you don't get the luxury to actually trade every time. You can actually be trading, let's say, only during the New York session, not only during the New York session, but it's actually more volatile and movements happen mostly during the New York session. Whereas the forex market actually is divided into sessions too. We have the Asia, the New York, and the London session. In my subsequent video, I'll actually find an episode to talk about that too. Then the crypto doesn't have that kind of session. You can trade it, just have your setup and you trade it anytime. I'm not saying crypto is better, but I'm just pointing out. So yeah. But actually, anyone you want to go is fine by you. So this is your boy Flexi. Kindly like and subscribe to my YouTube channel. If you find value in this video, share and comment. Also share to your family and friends. Your trading buddies. Maybe this might help them too. So peace out with love.